Equity markets not for the faint-hearted. Just take a look at that. From the lows, we've recovered close to around 130, 140 points, or actually 180 points. Though at one point of time, we were at around 17,700. So in a matter of around half an hour that we are opened, we have moved close to around 250 points on the index level cells, and plenty of stocks moving around. A couple of these stocks, they're still doing well. Adani Enterprises, though it's come off from the day's high. You pull up Bajaj Cements, it was up close to around 13% just a short while back. That as well has come off a little bit. And ACC as well has come off a little bit, though all these stocks are still holding well in the green. We're talking about stocks that are holding in the green. Well, data patterns, that stock is up close to around 10% the last time I checked. Well, to understand the past quarter, the way ahead as well, we're joined by Mr. Rangarajan, Chairman and Managing Director of the company. Hi, Mr. Rangarajan. Good morning and congratulations on a solid set of numbers. The street likes what you have delivered. The point is, what's the outlook going ahead? Now, for quarter four, the last two fiscals, you've done revenues in the vicinity of around 160 to around 170 crores odd. Do you believe that this quarter four as well will be as good? Can it be better than the past quarter four? And if that's the case, what do you end the year with? Earlier, you were guiding for around 25 to 30%. You're comfortably going to beat that, right?
Okay. See, our business has been always quarter four focused till now. That is because, the order pipeline order book was always small. So we were also pushing it to the end of the year. Today, the situation is changing. And we are also trying to aggressively make the first 2-3 quarters much more rather than only quarter four focused. So that is what you have seen in the last 3 quarters. Quarter to quarter, we've been doing well. And as for the guidance for the last quarter of the year, we have told you 25 to 30%. I think we can make that as a yearly, maybe we'll cross 40% revenue growth from last year. 40 to 45 is what you're looking at now. So upward revenue growth is planned, and that is according to what we're working on. And more importantly, it's that you need to look at this market. See, defense market is a long-term market. We have just started playing the game now. I believe you have to look at the next 5 years. I think we'll do substantially well.
FY23, you're talking about a 40% growth over last year, right?
Yes, 40 plus is what we expect.
So you would end this year with revenues of close to around 430 crores. Just putting a rough math, 420 to 430 crores, or that's a gettable number for FY23.
We don't plan to exceed that number. Yes, correct.
And what about FY24? What kind of a guidance do you? I mean, this year you're going to outbeat that 25 to 30%. You're going to do nearly 40%. But for FY24, what kind of a number are you looking at? And what about margins? For the 9 months, it's in that vicinity of around 37, 38% odd. You have told us in the past you want to go to the mid 40s. What's the outlook?
It will be above 40 is what we expect as far as the margins concerned. And the next year, we expect to grow probably another 30%.
Okay, another 25 to 30% is the revenue growth that you're expecting in FY24, correct?
Right.
That's a solid growth year after year, Mr. Rangarajan, that you're looking at. Can you tell us a little bit about where the large chunk of the orders are coming in from? I do know what your order book is currently. In the last quarter, you saw about 163 crores of order inflows. Is that a quarterly revenue order inflow run rate that you're looking at, about 160 to 200 crores? And where are you seeing the large opportunities now in terms of different segments?
You see, our main business is coming from radars. We have a large part of the 1,000 crore order book we have. A substantive portion of the order book is in radars. We're also getting a number of orders in electronic warfare. Going ahead, the number of contracts are getting planned on BEL. Some of the earlier products we have delivered to DRDO, those are going to production. So we expect, those contracts to kick in the coming years. And that is how the revenue will grow. Second point is the market size is very, very large. The percentage of market we access today is very small. Our intent is to actually build homegrown products to address the market, increase our total addressable market so that the scaling can happen substantially in the next 3 to 5 years.
So how much do you think you can do in terms of building your own products, scaling up the market? What is the incremental opportunity size for you? And I do understand that you also have, you've been nominated as a development cum production partner for Dornier as well. What kind of execution timelines are you looking at?
The Dornier upgrade, the execution timeline, next year we need to deliver the products. It has to fly next year. And based on which production orders will happen from HAL. This is for Navy and Coast Guard requirements. But addressing the first part of the question, See, we are a very development-centric organization. We build our own products from scratch. And now that the market has opened up for Make in India full systems, this is where we want to really put in efforts in all the areas of competence we have developed over the last few years. That is in radars, in electronic warfare, in communication, avionics, probably satellites. We want to invest substantive money in product development and see that we scale the company, because this is the time the company can grow, and the market is very, very large. We're used to buying from abroad and integrating in India. We want to make a differentiation. We want to build products here and address the market space. This is what we've been doing. So we will continue to do that very aggressively going ahead.
All right, Mr. Rangarajan, we're a little tight on time, but I want to squeeze in a couple of questions. Going by the pace of growth, and given that you have another manufacturing facility that will get commissioned in this quarter, which takes your potential revenue to around 1,000 crores. Going by the growth numbers you're looking at, by 2025, 750 crores, is it gettable? That's the first part. And the second part is your cash conversion cycle. As of the last quarter, you have declared it was around 360, 370, but you said that that's likely to come down to around 300 days. Do you hold on to that? Will it come down to around 300 days? Go ahead.
Yes, I think we should look at 750 crores going ahead 2 years down the line. And also, with more production orders happening, and I think the cash cycles will come down, like what we projected earlier. Year on year, we expect it to start coming down. There is a blip in this 1 year because we are ordering more material because of this problem of availability of components. So we need to deliver. So we are ordering ahead early. But that is a blip because the market now, the components have started coming, in time. So we are able to predict market delivery and components. So that once we get that in control, I think the overall cash cycle will come down.
Okay, all right. We'll leave it there. Thank you very much. Appreciate you joining in with that perspective. Thanks indeed. We've got the market, I think, which is, all over the place. 12 points now on the index. We're at, 17,615. And it's more flattish, right? I mean, let's look at the Bank Nifty. Maybe the Bank Nifty is now back in the red.
Under pressure.
It's basically been a big round trip, right? I mean, a big cut, a big bounce, and then most of those gains being given back. And the Nifty Bank is up on your screen. It's still it's still up from the opening levels, but this is still, it's still playing out. And by the way, we're still in the first 30, 35, 40 minutes of the market opening. I guess there are many more of these moves coming through the course of the day, as I was saying earlier. This is just the first act of what perhaps is a long play on this one. We'll stay with earnings, more earnings, and speak with the management of Go Fashions. They reported numbers as well. Revenue growth has come in at 24%, and gross margins are also steady at about 60%. In terms of store expansion, they added 35 new exclusive brand outlets in the third quarter, which takes the total count to 604. Markets are more excited about the aggressive store expansion that they're coming up with. Gautam Saraogi is Executive Director and CEO of Go Fashions India. Is joining us to take some questions. Gautam, good to have you with us here. Good morning. Prashant this side. If I stretch the third quarter a little, I go back a little bit, take the 9-month full number, gross margins for the business are now tracking some 59%. They're down about 170, 200 basis points compared to 9 months the previous year. This is despite the higher share of EBOs in the sales mix, which is about 77%. Could you explain what's happening on the margin front?
Yeah, sure. So see, in quarter 3 last year, we had reported 61.5% of gross margins, and we had seen an inflation in the raw material pricing in December 2021, and we had also parallelly increased our selling price when the raw material prices had gone up. Post which we had guided a 60% gross margin on an annualized basis. So keeping the 60% gross margin in mind, we are currently between 59 and 60% currently. So it's more or less close to what we had guided. And this will also continue on an annualized basis.
Okay. Your same store sales growth was 10%. That was largely led by value growth. So in terms of volumes, you actually saw a decline this time around. Can you tell us what is the prognosis in terms of same store sales growth? Are you seeing any kind of pressure there? Will it be in low single digits for FY24 as well?
See, we are actually opening many stores in the same micro area. In the small micro area, we're opening n number of stores, which sometimes leads to cannibalization of our existing stores. So for us, the right metric to track in our business is same cluster sales growth. So the same cluster sales growth has been very encouraging this quarter. We've seen a 24% same cluster sales growth and 11% volume growth. But having said that, as management, we still want our SSG levels to be positive. So in the coming quarters, we are going to target a 4 to 5% volume growth and at a same store sales growth level as well.
Okay. All right. Hi, Gautam. Good morning. Gautam, post the festive season or from mid-November, various checks suggest that there's been a slowdown. Have you experienced that? Or are you seeing, business as good as it was earlier? Give us your brief understanding. And also online sales, I think it's only around 2.5% for you. But it's growing at a rapid pace. Where do you see this number headed? Go ahead.
So very rightly you asked, see, this quarter has been a decent quarter for us. I wouldn't say it's been a great quarter. It's been a good quarter. As management, we expected our revenues this quarter to be around 184 to 185 crores. We've delivered about 177 crores of revenue. So we are about 7 crores short of what we would have ideally wanted to be. So it's been a good quarter for us. In the festive quarter, October did very well during festive. Then we saw a sharp fall in November, and then December revived back again very well. So I would overall say it's been a good quarter. As far as what was your second question?
Your online sales. Online sales was a small part of your business. It's only around 2.5%, but it's growing at a rapid pace. I think 20% odd. Where is that number headed?
Yeah, so online is doing very well for us. We have taken a lot of initiatives at an omni-channel level and improved our own website selling as well. So currently what is at 2.5%, our target is to reach around 5%, and then maybe in the next 3 to 4 years get to around 8 to 9% of the business.
Okay, 8 to 9% of the business from 2.5% currently. Would that mean spending a lot on advertising, marketing? Because even the online space has become quite cluttered now. Ad spends as a percentage of sales, how much do you think it could go up?
So our ad spends will continue to be between 3 to 4%. See, currently our ad spend is about 3.5%. So we don't really see a spike in our ad spends. The online sales will organically grow with the offline, which is obviously going to be a slow way of building that business, but that is the right way according to what our business asks for. So we will not see an increase in ad spends, but slowly that percentage of 2.5% will eventually go to 8% because of our strong offline presence.
Okay, just one quick point, actually two, Gautam. What would the average selling price for you be? It's about 730, 740 rupees right now. How do you see that? I mean, as a strategy also, responding to market conditions in terms of input prices is one thing, but how do you see this panning out from a strategy point of view in the coming quarters and
See, we as a company want to price most of our products less than 1,000 rupees. So today, more than 80% of our products are priced less than 1,000. So we see this average selling price going and being eventually settling down between 900 and 1,000. Now, how is that going to happen is based on our new product portfolio. The newer products which are coming out are a slightly higher selling price. So our ASP, which is say at 730, 740 rupees right now, will eventually over the next 2-3 years go and settle down between 900 and 1,000. As a strategy, we don't take price hikes for our existing products unless there are long-term increase in raw material pricing. So for us, growth is going to be driven by volume and value is going to be driven by new product introduction with a slightly higher selling price. So we eventually see the selling average ASP settling down between 900 and 1,000.
That between 900 and 1,000. Got that. Thanks a lot for joining us, Gautam. Have a great year ahead. That's Go Fashion for you. By the way, for the market, it's really all over the place. So the market may look like it's in flat territory right now, but it's been through a massive roller coaster ride in the last 1 hour or so. A lot of the Adani Group stocks have staged a good comeback. No two ways about that. Adani Enterprises, Adani Ports, Ambuja Cements, all up about 5 to 7%. But then again, these stocks are a little all over the place. So better to exercise a bit of caution. As Sudarshan was telling us earlier, that it is perhaps a no-trade zone today as the market settles with all of the clarifications that are coming in both from the Adani Group as well as the rebuttal from the Hindenburg Group as well. So all of that news flow hitting the markets, and it's really very, very volatile at the moment. The Bank Nifty has recovered though. It's trending in the green line. So suffice to say that the market has recovered from the blows that it saw in the last half an hour, led by a lot of the Adani Group stocks and banks. Bank Nifty is now trending in the green. The one pocket that's perhaps not looking too good this morning is some of the auto names. So Bajaj Auto is down 2%, despite the management saying that the worst could be behind. Eicher Motors as well under a bit of pressure. These stocks rallied quite a bit in the last many days, so maybe some amount of profit taking. And HUL down 2.5%. ITC, remember, comes out with numbers this week. Earnings heavy week. There's SBI, L&T, ITC, Tata Steel, all coming out with numbers this week. So we'll get a lot of news flow on that account. Let's slip into a quick break. In fact, after all the to and fro that the market has seen, how do you approach it for the rest?
Okay, welcome back. The market's flat, 4 points to show for it. I mean, flat on the surface, but what's gone on into that 4-point change is a lot of volatility over the last 45 minutes of trade. Mitesh is back with us. Mitesh, just a reading of the screen more than anything else at this stage, Mitesh. What's your reading?
Shant, the understanding is that, with the kind of fall we had, some kind of pullback can happen, some kind of short covering can happen. And let's not forget, we'll be having a big event day after tomorrow. But I think till we cross 17,800, the structure will be on the weaker side. So maybe, you might get a pullback for a day or two. But if it fails to get past 17,800, which was multiple times, it had acted as a support, then I think we are coming back down to the lows which we made today, and maybe even lower levels of 200 average can be tested. So the structure is not very positive. But with 3 days of big fall from 18,200 to as low as below 17,500 today, I think a pullback is a possibility.
Okay, in terms of individual stocks?
In terms of individual stocks, I would say I have a buy on FSL. That's breaking out very, very nicely, and also managing to get past its own 200 average. So that's a buy with a stop at 104.5 for targets of around 114. And the Bajaj Finance, after a long time, are showing some signs of reversal from oversold levels. So Bajaj Finance is a buy with a stop at 58.80 for targets of 60.50 on the upside.
All right, Mitesh, thanks a lot for that. Let's get back to the big Adani Hindenburg tussle. Well, just a while back, the Adani management clarified to CNBC-TV18 that the FPO is well on track. The report is completely unsubstantiated, and they gave us key numbers in what the exposure the Adani Group has to the Indian banking system, which is around a little over 20%. Well, Nimesh and Surbi, my colleagues, are here to bring you the latest on what both sides have to say. Nimesh, first, let me hop across to you. The Adani Group CFO came on our channel and clarified quite a bit. What were the key takeaways?
Hi, Sonia. So there are 3 key big takeaways from what we understand at the interview that Robbie Singh gave to CNBC-TV18. The first one is on the Adani Enterprise FPO, and that's going to be a big focus stock because of the FPO ending tomorrow, which is 31st of January. Now, for the FPO, the management very clearly clarified that they're going ahead with the schedule as well as the price band. So no change in the price band, nor there is a change in the schedule as well. They're very confident about the subscription in the FPO, and they're very clear that the bankers and the shareholders are quite confident that there will be a lot of demand as far as the FPO is concerned. Remember, the FPO closes tomorrow, and the price band is between 3112 to 3276. The anchor investor came in at 3276. So that is a big clarification that they are not changing any plans as far as the FPO is concerned, and they are very confident that there will be enough subscriptions. So that's the first part. The second one was on the group debt. That was again very important as far as the banks are concerned. Remember, last week the Nifty Bank collapsed 6% in 2 days on the concerns of the debt. Overall, the CFO very clearly clarified that the overall group debt is around $30 billion, out of which $4 billion is the cash that they hold. Now, as far as Indian banking is concerned, the overall debt exposure of the Indian banking is just 23%, which works out to $6 billion. And if you add the top up, then it works out to $9 billion, which means around 72,000 crores for the entire Indian banking sector. So even that is not very large compared to the book size of the Indian PSU bank. So that was another important clarification as far as the exposure of Adani group level debt to the Indian banks. And the last one was on Ambuja Cement. There was a lot of fears about the pledge shares getting sold of Ambuja Cement. Remember, the promoters bought the stake in the overseas entity, and for that they have pledged the 62% what the Adani promoters own in Ambuja Cement. The CFO very clearly clarified that because of the Indian regulation, it has been considered as incumbent, but there is no shares with the foreign lenders that they can sell in Ambuja Cement. So 3 big takeaways: the FNO is on track, the FPO is on track, and they're very confident On debt, the India exposure is just 23% of overall debt, which is around $9 billion. And on Ambuja Cement, there are no fears of any incumbent or any pledges getting sold by the foreign investors.
Okay, in fact, very important clarifications coming there from the group. Thanks, Nimesh, for that. Let's listen in to what the group CFO of the Adani Enterprises had to say on the SEBI probe, of course, the Hindenburg report, and the fact that the FPO will go through as scheduled. Listen in.
We are confident that on the institutional side, that the entire issue is from based on our discussion, roadshow meetings, etc., will be fully subscribed. And that's why we clarified the rumors were going on. So we clarified on Saturday night that that the FPO will proceed on current pricing and on the current timelines. So we are supremely confident that from an institutional perspective, we are there. But there will be some pullback in the retail given such as in the pricing differential and the volatility. FPO will go ahead on the same conditions that we launched. Gross aggregate debt position in the group is just about 30 billion, of which $4 billion we hold in cash, approximately. Just under $4 billion we hold in cash. Because the way the domestic bank is, there was some sanction limit. So if I just go on a sanction basis, it will be about 9 billion. The first thing is that 0% of Ambuja shares are pledged. What happens is that under SEBI's regulation, SEBI just has a regulation, which is a good regulation, which is simply that please report encumbrance. So if we say that we will hold 63% under SEBI strict reading of it is considered encumbrance.
Okay, that's Adani's response, but the back and forth continue. The tussle is on. Hindenburg has come out with another response post Adani Group's clarifications. Surbhi has the latest on that. Surbhi, over to you.
Hi, Sonia. Well, Hindenburg is not buying any of the clarifications that have come in from the Adani Group. I'm just going through some of the most important extracts from their response that came in this morning. To start off with, Hindenburg is completely refuting allegations that were made by the Adani Group that the Hindenburg report committed, and I quote, flagrant breach of applicable securities and foreign exchange laws. So this they're saying is absolutely baseless, and they categorically deny this. Hindenburg goes on to say that out of the 88 questions that they had posed, 62 remain unanswered in the Adani response. And out of the remaining questions, the group has largely confirmed or attempted to sidestep our findings. I'll just get to the heart of the matter, and I think one of the most serious allegations that have been raised in this report is quote-unquote alleged related party transactions between Vinod Adani and the Adani Group. Now, this is something that Hindenburg says has not been adequately addressed in Adani's response. Let me just quote again from this letter. We asked about the source of the billions of US dollars that have flowed from Vinod Adani associated offshore shell entities through the Adani Group. Adani's defense, we are neither aware nor required to be aware of their source of funds. And this, Hindenburg is saying, is absolutely not satisfactory. Hindenburg goes on to say in its response, and I quote, we believe investors should regard Vinod Adani as a related party. So there's a huge dispute over this one aspect. Then the Hindenburg response this morning goes on to say that the Adanis have not clarified their association or their relationship with the Chinese national Chang Chung-ling, and they go on to allege that this national has some role to play in the Augusta Westland scandal, and this continues to be a grey area, and they are at least not satisfied with the responses that the Adani Group has given. The final conclusion really is Adani's response largely confirmed our findings and ignored our key questions. So the battle of words continues between, I guess, the two entities.
Okay, well, thanks a lot for that. So it's a tussle back and forth from the two entities. Nimesh, Surbhi, thanks for that. Let's slip into a quick break. We have dealt at length on the Adani issue and on the results, but the budget is only a few days away. I mean, it's the penultimate day in any case before the union budget. So after the break, we go full tilt on what to expect. Lata will be here. She has her Economist Roundtable coming up in just a bit. A. Prasanna of ICICI Securities, Soumya Kanti Ghosh of SBI will be joining in just a bit.